All right. Hey, this is Cedar and D Cruz. Think I still have you here.
Yes, yes, I'm still here. How are we doing today?
Awesome. Good. How are you? Never know when you first
Good, good.
turn on the stream if everything's going to work. So, good to
Right,
check.
right. Yeah, no, nice little double check.
All right. Well,
But
we're
yeah, cool.
here for the psychology of trading, mind over matter. Most of trading success comes from how you think about things, how you manage your risk. Yes, you need to learn technical
Yes,
analysis, but you've
definitely.
got to learn to manage risk, which is position sizing and execution and repeatable for consistent profitability. Otherwise, huge drawdowns, huge upswings all over the place. And the sure sign of a inconsistent trader, aka not currently profitable, is when they take a screen capture their P&L, it's like up and down all over the place, right? So you've got a big day that's up 15-20% on the account, and then another day that's down 12 or 15% on the account, and then another day that's up 2%, and then another day that's down 10%. So you've got all these random swings. And what you're looking for ultimately as a trader, at least as far as in my 21 years of watching myself primarily at first, which I struggled a whole bunch, was noticing that the closer I got together on the profitable days and the smaller I made the losing days, the better I would be. So yes, every once in a while we have, huge days, but for the most part, couple 2-3% is a big day. And if you've got more than that, you're happy about it. But that doesn't mean you're a better trader. It just means that day was, more in your favor or whatever. But keeping the ego out and not letting those huge winning days or huge winning trades throw off how you're thinking about trading. So one of the things that D Cruz and I were talking about this week is, and we always we don't plan like a whole curriculum, like some of the new traders boot camps and stuff like that. Like there's not bullet points of everything we're going to talk about. But what we do is we say, here's what I'm seeing in chat. What are you seeing in chat? What are you seeing people struggling with? And we both said greed this week. It was like, oh yeah. So I'll let you open up with that, D Cruz.
Yeah, definitely. Yeah, just kind of going back on, trying to go back on pretty much everything you said. Yes, TA is easily, the easiest part of, learning how to trade. And, after a while, you could learn how to draw a support and resistance line, draw a flag, all of that good stuff. But yeah, definitely your psychology and the mind, the whole mind part of it is the hardest, and that's what a lot of traders do struggle with. Whenever being in a trade, um, you start to see a green, and then you kind of, or you could either it goes both ways, and we'll go and work on losses because I tend to see a lot of losses kind of go out of hand, I guess, from a few members. But and definitely does happen. So just don't think that I'm like singling you guys
Yeah,
out. But
it doesn't mean you're a bad trader. It
whatever.
means you have more to learn, right? That's, we
Right,
take it as
right,
learning
exactly.
opportunities.
And cutting your losses quickly, and I think cutting your losses quickly is always going to be the best, um, especially while learning and kind of developing a strategy. You see quick red, and what's like -10%, -15%. You could easily get that back in the next trade, right? So you don't want to position yourself correctly or over position yourself to where you're gonna have to, take a few more trades to actually gain that loss back. So you kind of want to make everything salvageable and just kind of, whenever you're red, it's invalidated right away. Just cut it, and who cares if it goes back up? What you're doing is you're preserving your portfolio, preserving capital to where you could easily manage that and get that back.
And
And
it
this goes for
actually
both sides. Even if you're
practices.
green and you see, contracts start to run, just take profit. And if they continue to run, who cares? You got yours, and that's the name of the game is taking yours.
Taking those early losses actually is
Mm-hmm.
good practice for losses, though, so you don't keep adding. So one of the things I see is somebody
Absolutely.
starts with a decent size position. Maybe they're a little oversized. Maybe they're on a small account and they're at 10% of their small account. And now instead of taking that 10, 15, 20% loss, they're adding to it and adding to it. And they're calling it a DCA, a dollar cost average. It's averaging down. It was already oversized. Even if it was 5%, you don't average down from there. Like that's your position. And the more you can practice being a good loser, So The Best Loser Wins, pretty sure that's a book. It's quotes all over the internet. The more you can practice being okay with like, I'll cut that and I can reanalyze the trade. I might step back in if I see key levels hold, but to practice being a good loser means you will probably be here next year. And to secure profits, that see green, take green that's in my profile is what D. Cruz is talking about. It doesn't
Yep,
matter what
absolutely.
happens. You put that money in your pocket. Now, if you then gambled it away on the next trade, chasing it because you felt like you exited too soon, you didn't put it in your pocket. What we want to do is be creating traders who are able to have income producing accounts. That's my whole vision anyway. That's how I trade my accounts. And I've had much larger main portfolio than I currently keep right now, much larger. And I found that if I'm trading 1% of that or 5% of this, my psychology is better trading 5% of a smaller account, even though it's about the same amount of money, because I know I've got that other capital deployed doing other things, and it's not all at risk in this. It'll be in different investments, different businesses, real estate, whatever. So looking at sizing, I think, is a huge piece with greed. Making sure that if you're trading a small account and you've got some profit, securing those profits is good execution. As you become a better trader, better at your executions, you'll be able to hold it a little bit longer potentially. And you'll see me, and D. Cruz does it too, like take your profits, or I'll say this is your safe exit. And sometimes that safe exit is the high point. And I took
Oh
my,
yeah.
like the exit was at 55%, and I took my exit at 38%.
Mhm.
And sometimes it's the opposite. Here's your safe exit at, 50%, and I took mine at 110. But
Right.
what you have to think about when you're considering where you are from a trading perspective is that you have to earn the right
Be
to
able to
give
let
yourself
those
that space,
rumors.
right? To give that the
Mhm.
space. And sometimes that means being scared of not, like, oh, there's that big push, I'm going to sell into it. That, and scared, I don't know if that's the right term, but that, like, there's the push, I'm going to sell. Execution is something that traders forget how to do as they get more experienced. So don't think just holding it longer is the best idea. Selling into strength, because if you haven't oversized in your portfolio, you now have capital left to be able to re-enter that trade. If you see a pullback to a valid level that you've been watching, well, now you've got capital left to redeploy. If you half ported it and then half ported the next one, and then both of them are down by 50%, you now lost half of your portfolio in one day. And let's say that's $400. The next day, my opinion is you should not be trading, because now you have $200. And been there, done that, and overtraded and YOLO'd stuff and, thrown money, like, okay, I'm just going to full port this now too. It doesn't even matter. I'm just going to, whatever. It's either zero or hero. Remove that statement from your mentality completely, because that's gambling. And that is the sign that you will not be here probably even in 3 months. Unless you have an unlimited supply of money to keep adding to accounts. And so the idea is about the execution. When we talk about greed, how do we execute? A profitable trade that was not executed well. So let's say you held it too long, you gave it too much room, and eventually it went, but you didn't stick to your levels. It was more just, I'm going to hold it zero or hero. Just because it was profitable does not make it a well executed trade. It doesn't make it a good trade. It's a bad trade that was profitable. Flip side, you've got a losing trade, violated the levels, the TA was invalidated, however you want to call that. Just because it was a loss, it was a well executed trade. That's still a good trade. And so you have to really kind of put that into your head of execution is what matters. Risk exposure is what matters. And it's very hard to execute properly if you're overexposed, if you've got too much of your account. And that's a relative thing. So let's say somebody they got an inheritance of $10,000, but they're really kind of living, month to month, or maybe they've got a couple $1,000s put away of their own money, but they got an inheritance of this $10,000. And somebody has told them, you should get into this option trading stuff or this futures trading stuff. Like, you're going to make so much money. and they're pretty much brand new. Maybe they hold a couple stocks, or, they've taken some courses or whatever. And I would say that's a lot of people. Or they traded a little bit in 2020 and then got out of it because they lost that account. And they're like, now I've got this inheritance, or I've got this chunk of change, and I'm just going to like put it in and trade it. You have to make sure that you have your edge defined before you start trading it. So I know it's really exciting when you're like, okay, I found this new concept. This is going to make money. Trading is the hardest thing you will ever do. I promise. Ever. I run 2 businesses. Well, I own and run 2 businesses. I've done a lot of interesting stuff, a lot of sales and marketing. I actually sold cars for 4 years. I've done all kinds of stuff, all the way through specialty in corrective exercise. It's the hardest thing you will ever do, is to learn how to trade, because of the emotion behind you managing your money, which is why there's a difference between paper trading and your money. Because if let's take this outside of trading and take it to the sales floor for selling cars. I can take a draw if I don't sell anything. I can take minimum wage or whatever it was, and I'm like, that was like 21 to 25. I can take a draw if I don't sell anything, but I have to pay that back. But if I sell cars the next month, it's not a loss, because, I am selling it. I'm just taking it as a draw in advance. It's not like I'm losing money because I didn't sell anything. I just am not making money. And then the next month I have a great month, pay back what the draw was. Once you've had a great month in selling cars, the draw month doesn't matter at all, because you had a spectacular month the next month. If you're making a salary, you have a predetermined amount of money to make. If you're making an hourly wage, you have a predetermined amount of money that you can make. When you're trading, if you're thinking about it as just, oh, this is a side gig and losing money, it's now not a side gig. It's side entertainment that you're paying money to be entertained, as opposed to thinking of it as a side gig or a side business. And we have to differentiate that. So thinking, oh, I can make it big, is the same as starting a new business, not doing any research at all. So not seeing who your customers are going to be, what your competition is. And when we go into customers, we're talking demographic, we're talking proximity to your location, we're talking, utilization, like how often are they going to come, what's the lifetime value of your client, all that fun stuff. You have to do all that research before you open a business, or you could open a block away from a hugely successful competitor, and you can't, like, you're just throwing rocks at their building. You're like, hello, anybody? And it's not going to work. That's the same idea with trading. So just jumping in because somebody else made money is the same as opening a business with absolutely no due diligence, no research, no heat maps from your commercial real estate person, understanding, I'm targeting people who make 90 plus a year, as far as income, whatever demographics you're putting in for what your business is. It's the same. We have to take trading as serious as a business. And there is no greed in business. If any of you, and I know quite a few of you have businesses, it's almost the polar opposite. You're like so happy to scrape by the first year, or even just break even. And for a lot of businesses, it's actually a loss the first year, maybe break even the second year, and hopefully you start making money. Trading is a business. So we have to take the greed out of business, because anytime a business owner is greedy, AKA charging too much for their product. So for me, I'll use the example of, I do a hybrid program between personal training and group training in my fitness business. And it is halfway between personal training and what you'd have, at a health club that's like $75 a month. So if I tried to charge what a personal trainer would charge to be in a group setting, I would be overpriced. And if I charged what a group trainer would be with the skill level that we provide, I would be underpriced, and then I would be jam-packed and not able to give the quality that I'm giving. Does that make sense? So understanding your product is the same as trading. Understanding what you trade well, what you don't trade well, is a critical aspect to your success. And
Absolutely.
if you,
Also,
yeah, go ahead.
or or no, just going back on that, like kind of what you said, you don't have to trade everything as well. So, you just trade what you're good at. The market's always going to have a lot of moves. The market's going to, I always see a lot of questions like, why don't you play puts, or,
Right.
why not? And it's just, I make my
It's not
money
what I
on
trade.
calls, and, the amount of red days compared to green days. I mean,
Right.
it's just,
That's the piece.
I play a lot of calls compared to puts. So
Right.
it's just like, trade what's best for you. You don't have to trade everything. You don't have to trade the whole move.
And that kind of goes,
It's
we'll go
just,
back into fitness. If somebody comes and says they
mhm,
want to do bodybuilding, I can do functional bodybuilding. I don't do traditional bodybuilding, even from a private
right.
instruction perspective. Even though I have done it personally, I don't do it, even though I have, if that makes sense. I
Yep,
just, it's
absolutely.
not something I
Yeah.
love. I'm not going to do it.
Yep.
You should do what you're good at,
Just stick
and
to it. You could
hopefully you
trade
love
one
it
ticker and be
too.
successful.
I
Yeah.
really think that's a huge part of it, is that greed piece of like, oh, I've seen these huge gains, posted all over the internet, not just bull trades, but like everywhere, of these huge trades. And it's like, oh, I'm going to go chase that ticker because somebody else is talking about it on FinTwit, or, all over the place. You really need to pick one thing and get great at it. And then you can expand out.
Yep.
I just told somebody by DM yesterday, they were like, well, I think I really like the idea of NQ futures. And I was like, well, what do you mean you really like the idea? I was like, well, I see really big moves there, and I think that's something, that could be really profitable. And I said, you absolutely should not trade NQ for a year at least, until you have been profitable trading ES for at least 6 months consistently, 6 months rolling,
Yep. Yeah.
because
And
there's
Q is
more
a different
volatility.
devil by
It's
far.
it's a
Oh yeah.
crazy, crazy wild beast. And if you're
Hmm.
oversized in it, you wipe out whole accounts. It's not, like it's
Quick.
brutal. And so
Yep.
picking one thing and not being all over the place and not being greedy with your trades is going to be a huge piece as far as consistent profitability. Um,
Yep. And no setup, no trade. Going back on that too. It's just, if you're looking at your one thing, don't, there's no setup on, say a one ticket that you're trying to trade. Even if it's just buy, don't try to, fish around and look for something just because you want to trade. So at
oh,
that point, that's where that greed kicks in, and
you just said
you're
something
being greedy. Yeah.
really, really important. No setup, no trade. So we just said only trade one ticker, get really good at that one. And my suggestion is SPY, because it's a little slower
Oh yeah.
moving. We're moving, like an average daily range, and ADR is about 1% right now. Was 2%, or like 2.2, I think, at the high when we were really volatile. But SPY is
Hmm.
nice because if the individual tickers can go against you really hard, where SPY, because of the weight, is less likely to go against you super hard. Technically, I say that with a grain of salt, but compared to QQQ, compared to trading Amazon, compared to trading Tesla, it gives you kind of an anchor point, right? It's a cross section of 500 tickers. And yes, it is weighted more with our big tech. One ticker and one trade. So no setup. You need to find the one thing, and the only way you can do that is with journaling. You need to find the one trade that you are more consistently profitable with,
Just stick to it.
and man, perfect that thing. Like, more profitable is one thing. Doesn't mean you're great at it. It means out of all these trades, here was the setup on the trade, here was my execution. I did this better than the others. And then you take that, we could call that a B minus. It's the one that's passing grade. It's, kind of okay. And we want to turn that into an A. We want to turn that into your A plus setup, that, even if I have to wait for this for a little bit, it's the one that pays me most of the time, and it's the one that pays me most of the money. And I have 6 or 7. I have 5 that I absolutely love, that I've developed through the years, but you have to start with one. You can't get good, the jack of all trades concept. You cannot get good even at 2 or 3. And from a psychology perspective or neurological perspective, when you look at learning any new skill and trading a setup as a skill, if you choose to focus on 3 things, and go back to fitness for this, I like to take things out of the context of trading, because I think we get so stuck in trading. So people come to me to get in better shape, all kinds of different determinations of what that is. But basically, they need to exercise more, they need to eat healthier, and they probably should drink less alcohol. That's, or maybe it's Cokes, or, soda, whatever. But there's three things they usually need to do. The research says that if you have three habits you're trying to change, you have a 5% success rate. So we'll transfer that. We'll say 3 tickers you're trying to trade. And I know a lot of people that try to trade more than that, but 3 tickers, if we follow that rule, is 5%. Two things. So just exercise and changing food, or just 2 tickers, because you're having to pay attention to 2 different things, has a 30% success rate. And this is not in relation to stocks. It's not in relation to fitness. It's in relation to everything that humans do as far as execution of behavior patterns and changing it from having to use control to having it be habit. Once we get to one thing, one habit to change or to focus on or to practice, you have an 80% on average success rate. I will take that B- all day long, right? Because it means I'm definitely passing and I can improve from here.
Oh, yeah.
We could take that to the A+. So that's when you
80%
said that,
is
I was like,
great.
yes, right? That makes you money. What was the first thing you traded, D Cruz?
I was just about to say the first things I traded were SPY, Apple, and Netflix. And going back to my alerts, what am I?
There they
what
are.
am I like? Yeah.
Well, except
What
for
am I
the
still
little
trading?
the
Yeah,
little
well, except
addiction
I kind of
of
substituted
QQQ.
QQQ.
Yeah.
Right,
Well,
because I was like, ooh, hello premiums. But yeah, but I mean, and I only, kind of went to Qs because I understood Apple as well. And, understanding Apple and, just Microsoft in general is kind of like a ticket to being successful in Qs. I mean, all you got to
right.
do is kind of watch top 5. But no movement in Apple, no movement in Microsoft. You're not going to get movement in Qs, plain and simple. You need those two to be moving. Then if you have, Amazon, Google, Nvidia not moving, well, it's going to be a choppy day. Or there's certain weight that needs to be distributed and like kind of going with your trend to actually be, playing upside. And that's why today I was kind of like hesitant on that, just because there's a lot of, you know, indecision with our tech, and that's kind of
Yeah.
why I haven't really been liking Q's upside, just due to just overall Apple weakness. But and yeah, I don't know. But mainly I traded Apple, SPY, and Netflix when I started, and then I kind of then I was testing everything out, like Boeing. Then I blacklisted that pretty quick. It just, wasn't it wasn't for me, right? And then
Right.
even just any airlines. I used to really enjoy actually playing Visa, especially growing like a smaller account. Visa is like a really nice smaller account ticker. So anybody out there looking for something, just start playing Visa. Also with Visa, you got to start watching fintech and also just banks sector. So keep in mind like JPN, like Goldman Sachs, PayPal, SQ. We'll kind of be moving with that, but yeah, that's kind of what I started with, and yeah, kind of just found my way back to Apple, and then now that Apple's not tradable, I just kind of
Yeah.
trade the index, and yeah.
Well, and it's nice when Apple's not tradable because I'm not a fan of trading Apple and you trade it really well.
Mhm.
But because I literally cut my teeth on trading QQQ, I actually asked people for a long time, why do you trade SPY instead of QQQ? Like, what are you doing? Like, it makes half the money that SPY does. And they're saying this is way too volatile. I don't want it. I'm happy with the consistency of what's in SPY. And I guess because, like tossed into the fire, because that was my exposure, my recommendation is that you're not tossed in the fire because you're probably going to lose more money longer trading tech only compared to the S&P products and not SPX. My official statement on SPX is that until you've been trading for a couple of years, you shouldn't touch it unless it's longer dated. Give yourself a week or two on it. The 0 days are very hard to trade. They're about like NQ. They're crazy. It's better to
Mhm.
prove consistency with something that is not exciting and then start, like, you develop that edge, you're going to have to then test it against a new ticker. And I think that's one mistake that a lot of people make is they get good at one and then they try to apply
Mhm.
those rules, those things that they've gotten good at to another ticker. Things
Right,
that
and
work
it's a
on
whole different beast.
things that work
Yeah.
on QQQ do not work on Boeing. Period.
Oh
They
yeah.
don't. So if
Oh,
you're used to
definitely.
trading
Yeah.
tech, Boeing's going to wreck you because Boeing trades like a penny stock, especially now. It didn't used to, but especially now.
See,
And
and I
so,
think that's what it was. Is that's what killed me. Is I was more of a tech
Right.
kind of like a tech guru right off the gate. And then I tried to, fish around and went to Boeing, and I said, nope.
Oh, right. Because it
This is
reverses
moving weird. Yeah,
when
exactly.
like Nvidia or Netflix would be continuing to have a little pullback, it will give all its gains back all the way back to
Yep.
the basis, all the way to the bottom from the open. And you're like, what the heck just happened?
Yeah.
So you have to
Oh
get to
yeah.
know that
Uh-huh.
personality of that stock. And while tech together, right, QQQ creates more of a in general personality, the individual tech Netflix moves different than Amazon does. And
Right.
volume is a
And
little
just a
better on
little.
Amazon now that they've split, but still, they do move different. So knowing that
Yep.
stuff is critical.
Yep. And just a little food for thought. Me not being able to trade Boeing, does that make me a non-successful trader? No,
Exactly.
I just don't have to. I mean, unless I traded Boeing, day in and out, which would be kind of, silly. Just because, I
Yeah,
just all I have
I
to
don't.
do
Right.
is just avoid it because I'm not good at it, and I admit that, and that's me being humble. And I'll just go to what I'm good at. QQQ, Apple, sure. And if there's no setup, well, I'll just wait.
And
And that's part of
that's contrary
that's
to
the
what
part
we're
of that
taught.
psychology.
That
Yep,
it is
you gotta be
contrary to what we're
patient.
taught. Bring up your Winker link. No, not necessarily.
Exactly.
So if you do one thing poorly and one thing well, what's going to move you forward is to not bring up, and I'm talking about personally, when you're looking at a team, we'll talk about that probably in another conversation, but the weak link, you're going to have to put so much effort into becoming better at the weak link than if you take your strong link, you take your thing that you're really good at. So you take your 80% setup that works, and lean into that and get better and better and better at it. How much work is it going to take for us to take 30% to passing versus 80% to an A, right? And I'm using terms now that, like, my kids, some of the schooling stuff doesn't even go by those grades, but I don't know, 47, I guess, and apparently there was A's through F's. I'm super surprised about it. I'm like, oh, you don't know what an
Right.
F is. It's failing. F is for failing. So that
Yeah.
would be 3 things you're doing at once. That would be 2 things you're doing at once. That's
And
failing.
if I could challenge you guys, sorry,
No, you're good.
if I could kind of challenge you guys, well, first off, I kind of wish we could say like by a show of hands, right? It's just like how many of you guys know what your top P&L ticker is
Oh, they can.
right off the top of your head?
In Market Talk, like post it right now. I'm
Yep.
going to go log in.
Right.
I'm actually
Yeah.
not even in the channel. So go, those of you that are
So
listening, jump in Market Talk. And I am uploading this to YouTube later. So if you end up listening to it in YouTube, what are the like 1 or 2 tickers? If you've been trading for a couple of
Yep.
years, 2 tickers. If you've been trading for 5 years,
and
probably
does that
3. But
and does that
one,
match up with your account? Like,
if,
do you know what your
well,
most
yeah.
profitable ticker is?
If you could only
And
trade
then
one ticker for the rest of your life, what ticker would that be? That's a pretty easy,
right.
like, oh, yeah, never touching. And I'll hear this all the time, Tesla,
And you could
never
even
touching.
go, or yeah, you could even go on your P&L, and you could scroll down, and you can see that's where you can see your gainers and your losers. And plain and simply, guys, I mean, this kind of seems like okay, this is almost obvious, right? Well, play the green ones, avoid the red ones, right?
I think
So
I love that
I mean,
advice. I mean, honestly, I'm not sure how many people have actually done that, but honestly, if you have not gone in and like TOS, I have only used it for a couple of years, so I think I might be wrong on this. Probably can see it over an extended period, but you can see it for this year. You can, go in and see where you've made money, your most money, and mine is net out. I mean, just looking at my metrics, it's always QQQ. But if you haven't
my
checked that,
QQQ is actually flying
yeah,
like up, like it is coming up quick, and I only started trading it this year, so that's that's saying something.
right?
I'm gonna stick to it.
I love Qs.
Netflix, yep, Apple, number 1 and 2 right there. So, I
All right,
just,
let's see.
I
I'm
challenge you guys all to just
reading these.
stick to that.
So Bobby
Stick to
Bullish
the
says
stickers.
pre-split Amazon, and the answer is it's not pre-split anymore, so it doesn't count. So once you have a character change like a split, it doesn't trade the same way.
Oh yeah, Tesla for one example. And that's
Tesla,
why
yeah,
I
Apple.
used to trade Tesla like almost every day, 3 times a day.
Yep.
And now I look at it, I'm like, I just laugh. And
Right.
I'm like, dang, I should have bought puts.
Yeah, exactly.
But it's
And
just,
and
but
I have a rule
yep.
of no puts on Tesla, even if puts are
Mhm. Oh
deserved
yeah,
on
true.
Tesla,
Yep.
just none.
Same.
Okay, so let's see. Let's read the rest of them. MakePlay says SPX, SPY, NVIDIA, QQQ,
Yeah, like
AMD.
QQQ. Yeah.
And AMD is on my do not trade list. Like if somebody else trades it that, I know that they trade it well. And same thing with you with Netflix and even Apple. I'll follow it, but I'm not
Right.
trading it myself. And then Option Birdie says, why are we typing tickers? That's hysterical. So
Yeah,
let's
but
see.
I do definitely challenge you
QQQ.
guys to all kind of try to stick to that ticker next week. Your top P&L, just try to ignore like all the other noise. And if we're calling out, SPY or something, just keep in mind to check like, you could use us as it's kind of like, okay, well, this is what they think. Let me check my charts and see if this is what aligns with
See,
me. Just that's every
I'm
call.
gonna see that and say for the rest of the
Mhm.
year.
Yeah,
Trade
even
it for
for
the
the
rest
rest
of
of
the
the year.
year.
Yeah.
You need to have
Hmm.
100+ trades on something of a
Oh yeah.
specific type of trade before you can
I'm sure it's a
say,
way
I
to.
do this well. A week is, I mean, we're entering into more volatility as we come seasonality, like into August. Typically, September is one of the more bearish months. However, we've seen July, that's the most bullish, be neutral. We've seen all kinds of fun stuff over the last couple of years. So just because somebody says that, what you want to do is really, the term is lean in. And I use some other language with that. And you guys that have
Mhm.
been around for a while know the term, but lean in to that, get good at that. And it probably shouldn't be Apple because Apple doesn't move as well, like D Cruz was talking about, but
Right.
SPY, QQQ, a ticker that you feel like, one of my coaching clients loves coin, trades coin like crazy. That's the only ticker they trade. And I'm like, I
And
think
if
I've
they're
traded
successful, then
coin
you
like
do it.
six
Yeah.
times this year and it's been okay, but it's not something that's I'm like, woo, I should do that again. And that person is
Right.
making a huge amount of money just trading coin. So don't get caught in that trap of I've got to trade everything.
Yep. You absolutely do not. Yep. Exactly.
All right. Well, looks like we're coming close. Like we usually, wrap it a little bit early, but
Yep.
the
I
tickers,
went a little over.
yeah. And it's
Cool.
Bobby Bullish says, sorry, I was making a joke there about the pre-split Amazon. It's pre-split. Well, whatever. it's,
Oh yeah,
it's
no,
pre-split.
pre-split Amazon. No, so yeah. Oh yeah, that was fun. That was fun. Same with Google, but
Yeah, as long as you
I
have
mean
it on the
now,
30-minute
yeah,
chart.
now it's actually fun for our IRAs because now we buy Google at 120 or whatever it's at right now. Or
Right, right.
yeah, discounted loans right here with Google and Amazon. So
Totally. Okay, well, FOMC minutes coming in about an hour and a half. I have a coaching session coming up, and I will be back on voice with you guys just in general for trades. And hopefully, I think I'm break even on the day right now. So hopefully, we'll make some money into Power Hour today.
yep, we'll be talking to you soon.
All right, see you
Thanks
later,
for the
D. Cruz.
session.
All right,
Yep.
bye.